Good afternoon, traders. This is Christian from Hertz Tropic Trade Group, and it is Monday, September 26th. So, risk disclaimer in front of you guys. Make sure that you read the full risk disclaimer here, but everything that we're talking about is for information purposes only. This will be a quick video. We'll go through the index action, but really, I mean, these videos are starting to sound very redundant because we're kind of going over the same types of moves. We've had, nasty breath. That has been, I think Helene Meisler just tweeted out that there's been 8 days in a row in terms of negative breath. So, September is playing out pretty true to form. I mean, to a T in terms of, what we've been talking about now for weeks, that September is just a very, very difficult month. And that is playing out, exactly. Now, there's always different factors involved. And, this move in what's happening in the yields and the dollar is pretty remarkable. So why don't we start there, and then we'll get to the index action. But you do have a version point of control taken out. So again, I use volume at price in my charts, right? I use a proprietary indicator called the market webs indicator. And if you go back on the 20-year time frame, I didn't see it before because I was looking at my 10-year time horizon. But if you go back and you have 20 years of history on your chart, you're going to see that another version point of control was taken out. Now, remember what we talked about on Friday? We said, hey, we had a nice hammer bar. But the disclaimer always with these hammer bars is that you need to see the confirmation. One candlestick is not a pattern. So you need 3. And we see these on the upside all the time too, where it looks like, a very toppy possible reversal bar and the trend doesn't get lost. So, I mean, this has been remarkable. We've been going down since the beginning of August. There's been no break in this trend whatsoever. It's been straight down, yields up. And again, the candles are getting larger and larger as we come into this. So, yeah, I mean, I think that this is a possible place for one here. When we look at yields at this point, right? And you could also look at this as Bloomberg has on the right side. They've got the RSI for some of these things. Interesting that the shorter term treasuries, right, are now pretty severely overbought. I mean, it's an 84 RSI. I don't think that I think that there's not a lot of debate for that. You're usually after above a 70 RSI is overbought. We're now at an 84. So just the buying pressure or the selling pressure, I should say, in the bonds has been unbelievable in terms of that, and it's across the curve. And in fact, the only ones that are not as overbought, that are not above 70 is the long end of the curve, right? So it's pretty unusual what's happening here. Yes, the Fed is a big is a big driver of that and what they're doing. They had more Fed speakers today. They're not making any changes, in terms of what they're saying. They're basically saying that, hey, they want to see inflation rate down to 2%. They want to see several months. I'm just quoting Mester, who was just mentioned. I think I have their comments up here someplace, but I don't. And she's saying that they need to see multiple months of inflation decreasing. So I think that we're, if you look at what's going on in commodities, we'll go over a couple charts. I think that we're on the way there. Don't forget, we have on Friday, we've got the PCE deflator. So that's another gauge of inflation, but you kind of have to get through this last week of September, and basically try not to get overexposed. I find it really difficult right now because if I'm in a short right now, I don't really want to be in it for that long, because I just think that there's going to be at some point, which I think a lot of people are saying the same thing. I get it. I think there's going to be, one hell of a bounce when it does happen, because whenever you have a situation like this, right, the boat is getting really tilted to one side in terms of sentiment, in terms of positioning. People are doing the same things over and over, right? Any little bounce in equities, people are shorting it, selling that rip very hard. And, right now that's working really well. And that is the trend. But eventually, you know, things are going to kind of break the other way. I mean, look at what's going on in the U.S. dollar. Again, this is, you know, shaking your head right now in terms of this price action. This has gone fully ballistic to the upside. We're at an 80 RSI here in the U.S. dollar, and it is accelerated to the upside on volume. So very overbought here. You know, could this be a blow off top in the making? It could. You know, I had talked about this a bit on Friday, and I put just like a lotto type position on, very small position on for some this week's puts for 13 cents. I think the 30 strike, and I kind of mentioned it after I put the trade on. I'm like, you know what? I'm like, as this thing is going up, I've often seen this, you know, I don't want to say I've often seen this before, but I've seen this before where things that don't normally make moves like this will actually just keep going for a couple days, because it's inflicting pain, right? And you know, the sharper and the higher the dollar, the faster the dollar goes. You know, it is blowing people out of things, right? So it will continue to go in its direction, you know, until it gets exhausted to the upside, right? Because this has now become a big momentum trade as well. So you know, tomorrow's Tuesday, and you know, we could often see a turnaround Tuesday. You know, I was kind of itching to put on some type of a, you know, some type of a reversal trade for tomorrow, but I held off doing it. You know, for now, I remain high in cash. I don't, you know, I have very little on right now. You know, so I basically whittled down all my positions. You know, I'm doing a little bit of day trading here and there, but it's tough. You know, you could have a couple trades work where you're scalping, you know, for basically nickels right now. And then, you know, you could look to see at the, so we haven't talked about the price action in the S&P, but we'll start with the 5-minute bar. I mean, this is kind of ridiculous, right? And I was watching NASDAQ a little bit, you know, mostly today because it was outperforming, but you know, you could see that once we had that initial momentum, right? You know, here's the pattern is that any of these early moves are just getting hit by short sellers right now. They're just fully loading up and, you know, trying to basically just profit off, you know, any type of move higher in the market. So once we kind of broke in here, there's just not much fight left. You know, here's the retest on the top of value for the day. Notice it got rejected. Interesting, by the way, that the value area for, oh no, this is just in the overnight session, I think. Yeah, this was Friday's value area. Okay, this is just in the overnight session, but notice that we got here as well, right? So this is sticky, right? When you see things like this, when you get to any bit of little resistance and the market can't push through it, you just know that the sellers are really in control of the market. So notice in the afternoon, right? This happened at 3 o'clock. This is another try, and the market just you know, and this is the same thing with a lot of these 5-minute bars where some of them are green in the first 1 or 2 minutes, and then by the time that they close, they're red, right? This is a good example too. You know, this candle right at the end of the day, very whippy, and touching the top of value again, right? Which is again using volume at price. That's how we're coming up with these levels. This value area is based on Friday's activity, okay, which is in here. Here's the volume profile for that. But just any little resistance, and it's not to be messed with right now. So there's heavy sellers in this market. That could change, and that could change quickly. But for now, you know, trying to gauge what day that is, especially, you know, we'll go back to this, right? Even though this is going back to bonds rather than equities, but you know, this has been going down on for more than a month. Sorry, almost 2 months. We're almost 2 months into this, right? So where we've basically just gone straight down. So, you know, it's really difficult to try to anticipate when you're going to get a change. You could see that these trends, as we always know, because I consider myself a trend trader, that these trends can last for you know, longer than you think, right? And markets can stay irrational for longer than you can stay solvent, right? That's the old Keynes saying, I believe that's Keynes, but it's the same thing. Like trends can go on longer than what you think is practical. All right, so where are we at this point? I mean, we're pretty heavily below this 5-period moving average. We did close at a new low, right? This is actually through these lows. So we've tested lower levels barely. Back in June, but this is a closing low at this point. All right, so that's where we are in the indices. There's not much to really look at here on the 1-hour chart too. Rejection, as we mentioned, on the 5-minute, also rejection at the 20-day in here, and I don't think there's anything new, different on the I mean, Nasdaq is showing a little bit of strength, but not much. And IWM, which did have a dividend today, so some of your systems may have been off, but that did actually break through Friday's low, but still hanging on to the June lows. All right, so that's about it. I mean, we could go over a couple other macro things here, but commodities, I did put so again, like breadth actually started positive for the day, right? We haven't seen even too many of those days. Like there hasn't been too many fake out days. Like usually, even if we start a little bit positive and the breadth is horrible, you can kind of figure out what kind of day you're going to get. But we actually had positive breadth for the day. It just got worse and worse and worse as the day carried through. One other notable too is that the VIX is now at 32. So remember, for a while the VIX was hanging at the upper mid to upper 20s, which was a little bit different, right? That we were just we couldn't get through 27, remember, for a while. So now that we've got this going on, right, this is just added volatility that we've got. So the trend is moving up. Again, it's not really to be messed with, in my opinion. First, this market's moving very fast. The only thing I could really say, and again, I'm not giving out any advice, but for me, being defensive is the best thing that you could do. And I've talked about before in a couple of these videos, just getting stopped out of a couple of swing trades last week. Now I'm just kind of I'm as light as can be right now in my trading account. So let's get over to, one other thing I just wanted to go through is like the commodities are making the move that I think people want to see if you're looking for inflation to go down, right? So you do have the breakdown in the commodity ETF. I've talked a lot about crude breaking down as well. Crude, by the way, if you are looking for a level, right? So we've got 76. I think 75 is a level to watch, right? Or 74.35, right? But again, these things are coming undone pretty quickly. Look at DBA, which is the agriculture ETF, right? This also broke pretty decently today, down 1.6%. So that's a big move there as well. All right, so all kinds of breakdowns going on at this point. All right, so we'll end the video here. Again, I wanted to keep it short and sweet for Monday. We'll see if we get any type of different price reaction, but waiting and being patient right now is paramount, I think, in terms of being a risk trader. So thanks for watching today's video. Have a great night, everybody, and I will see you tomorrow.